Hi, I'm Hedgeye's founder and CEO, Keith McCullough. Good news, the Hedgeye Investing Summit is back. We're super excited about this one as always. The first week of October, I'll be hosting in-depth conversations with the smartest minds in investing. Some of my favorite people like Liz Ann Saunders, Kyle Bass, and Grant Williams, just to name a few. We'll be discussing the big stuff, the big trends impacting markets in the days, weeks, and months to come. You don't want to miss this one. Registration's free. How good's that? You won't hear pro-to-pro conversations like this anywhere else, anytime. It's a weird thing, and I trigger people when I say this, but I call Bitcoin a commodity. I just put it in my commodity box because it's got similar vol or volatility attributes in a shorter time series, of course, because it's not that old. But I've always put Bitcoin and crypto in the box, in my asset allocation box of commodities, because they have the same type of volatility attributes. What you have now, and I'm always smaller in those, Jurrien, because I volatility adjust my asset allocation. So I've always, my max position in coffee, for example, or oil for that matter, is always going to be 4% because of the volatility, historical vol. Oil vol can go to 300 when the oil price went negative, and you don't want to be long oil when that happens. But my question is, you know, and it's weird because everyone's getting concerned about the stock market correcting 10, 12, 20%. And the things that are the riskiest on a vol-adjusted basis are losing their vol week by week, month by month, commodities and Bitcoin in particular.
Yeah, we're in a fascinating point in the cycle, and seeing the disparity or the divergence between gold and Bitcoin, which I kind of did my deep dive on Bitcoin about a year ago, and my conclusion was it is kind of like a more convex version of digital gold, I guess we can put it. But Bitcoin has been designed to be price inelastic, right? So it's like the volatility. People see it as a bug of the system, but I think it's actually a feature of the system because, with a commodity, if demand goes up, you have a supply response, and you don't have that in Bitcoin. I mean, maybe mining goes up a little bit, but still, you're going to have so many coins. Mm-hmm. And so it is going to remain inherently volatile, although over the years, probably it will become a little bit less so. But it's interesting, the Sharpe ratio of Bitcoin, and I don't think a lot of people appreciate this, is the same as a 60-40, S&P 500 Barclays Ag. It's about one and a quarter. It's the same Sharpe ratio as the 60-40, but the S&P is in a 20% drawdown maybe a quarter of the time, and Bitcoin is in a 20% drawdown like 80% of the time, but it's going up 200%, so you don't really notice it. But I think for me the lesson for Bitcoin is that a little goes a long way, right? So if you own it because you want to own a real asset, and I assume I see it as real estate and commodities and gold. It's a real asset that doesn't inflate itself out of existence. And if we're locking in, let's say, a 2% negative real rate by owning bonds, then you just need enough of Bitcoin or some other real asset to compensate against that. And for Bitcoin, that might only be 1 or 2% in a portfolio. You don't need a lot, and then you don't get hammered by the volatility, right? So like a 1% allocation of Bitcoin in a 60-40 only adds about a percentage point of volatility per year, and it doesn't increase your drawdowns because it's uncorrelated. It's not negatively correlated, but it's uncorrelated, and so it actually kind of works in that sense. But not if you own 20%. Then it's going to have a material impact, of course.
Well, that's the whole point about volatility adjusting your asset allocations. I mean, it's the vol, stupid. I mean, you and I get that, obviously. But again, when you look at it, like a day like yesterday, if I was running 60-40 with a blended U.S. equity book of that was overweight tech, I am overweight tech. So I'm getting bloodied over there, but I got a 4% position, my max asset allocation in Ethereum, and it's up the moon. So it's a very interesting, like you said, with lower sized bets, offset if you're trying to smooth out. Not that I try to smooth vol, but again, be diversified. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.